Hi there, and welcome back to another exciting episode of Finance Success. My name is John, and today we're going to be talking about the federal income tax and the history of it, more importantly. So, as our national debt approaches $27 trillion, we begin to wonder how we are going to pay off this enormous amount of debt, which right now our debt to GDP is 136%. And the IMF, the International Monetary Fund, says that if it's above 77%, it's past the breaking point. And so many proponents are to increase it, and some parties even vote to decrease our income tax. But basically, I'm not here to get political. I'm just here to go over what our history was. So today, we're going to be talking about the federal income tax. Now to start, did you know before 1913, it was not legal for the government to take taxes from the people, except for brief times during the war in which income taxes were levied. And it wasn't before the 16th Amendment that this happened, that permanently solidified our U.S. income tax that we see today. And it was a very controversial thing, but it was really popular among the poor and middle class to have this. And why is this, you might ask? Well, just like today, there was a lot of people that were extremely rich and controlling a vast amount of the wealth in America. So the poor and middle class thought, well, then the top tiered people should be paying more. They should do more of a part to help pay the government for our programs across the U.S., like our roads, our military, and other social programs. And so they thought of the kind of Robin Hood mentality. Steal from the rich and give to the poor. So in 1913, they got Congress to vote in the act of having a U.S. income tax. And it wasn't really that high. When you look at it, it was 1% for the people making under $460,000 in today's standards. So it's really not going to impact that many people. The only things that are really going to impact people are the really rich people making over $1 million. And if you're in the highest tax bracket back then and making over $11.5 million in today's standards, you'd only be paying 7%, which is still significantly lower than where we're at today, at 10% for the lowest tax bracket. So you might ask, how did the government pay for things? Because income taxes, when you look at it right now, are a bulk of how the government gets their revenue to pay for all of their programs. And it was mostly through tariffs. So there are more than one way that the government can impose taxes before increasing and even adding federal income tax. So that was just a little brief history of the tax code in the U.S. and how it got to where it is today. There was brief moments where it was extremely high, like in 1940s, right around the World War II time. The top tiered tax brackets were paying over 90% of their income to the federal government. So it depends on where you look at it. It's either higher or lower than it is. But just remember, it wasn't always a thing. And the Founding Fathers actually were against federal income tax. They deemed it unconstitutional. Because you have to remember where they came from. The reason we broke off as a country is because of the Tea Party and the Tea Act, the tea tax, and the taxes on all of their goods that were placed. So the people back then really disliked taxes. And so I'm just wondering what they think of it today when you see close to near socialist in our country. So that's basically all it is for today. I just wanted to do a short little brief video and show you just the history of it. So with that, peace out, and I'll see you on next time where I tell you the secret hidden tax that not everyone realizes. So see you then.